Carlos, how are you?
Hey, Mauricio, I'm fine, thank you. I hope all is well there too.
Yes, it is. Thank you. Carlos, Brazil market is still one of the worst performing equity markets in Latam year to date. We understand health situation, lockdowns, and political noise has been main drivers for underperformance. Can you provide an update on that?
Yeah, sure, Mauricio. So you were right. I mean, Brazil has underperformed most of its Latin America peers year to date, especially in dollars, right? When we look in dollars, the currency has devalued this year, and you were right. I mean, there was a combination of the deterioration of the health situation in the country, and also political noise, especially part of it's related with the pandemics and the lockdowns, right? I mean, with more people needing help, the government is being pushed into providing more aid to these people in tough situations that have lost their jobs or they cannot return to work. But the problem is at the same time that clearly these people need help, and but the government has a very delicate fiscal situation, right? The Brazil's debt to GDP ratio are very high, is very high, and this is always a big concern for markets, right? And so the concern is, first of all, for how much longer the health situation will be the way it is today, which is pretty bad, and how long or how fast the vaccination program will move, right? I mean, over the past few weeks, we saw an acceleration of the vaccination program, which is great news. But still, I mean, because of the situation caused by the deterioration of the health situation, the government had to approve a new aid package, which was already approved and passed. But with the situation is still pretty bad, there is pressure for more government expenditures, and that's what we are seeing today. A battle between parts of the government that are very concerned with the fiscal situation and other parts that are pushing for more government expenditures and more aid. And to make matters a little more complicated, the 2021 budget that was approved by Congress a few weeks ago, there are several critics to it saying that it will be very hard for the government to execute the budget and keep expenses within the spending cap ceiling, which is an important piece of our legislation and kind of a fiscal anchor. So this discussion is happening today, right? I mean, the discussion on what to do with the budget, what type of expenses you should cut to make the budget feasible, and how to respect the spending cap ceiling. These are being discussed between the government and its economic team and Congress very heatedly every day now, and I think this is source of uncertainty and nervousness in the markets, right? So that's the situation we are living in Brazil today. At least the vaccination has moved, has the vaccination process has speed up, and there is some hope that with people vaccinated, we can, the lockdowns can be at least partially reduced and people go back to work, and the pressure on for more government expenditure is also reduced. Let's see.
Then, what are your thoughts on central bank guidance and expected monetary interest rate path?
Yeah, so the central bank, well, one thing that happened also in it has been happening since the end of last year, but concerns have grown earlier this year is with inflation picking up, right? So we are seeing inflation expectations being revised up, both for the end of the year and mainly for the next months. So there are some analysts today expecting inflation to peak somewhere between 7 and 8% by mid this year, and at the end of the year, several analysts are already modeling for inflation higher than 4%. So this has triggered the central bank to start a process of interest rate normalization. So I think it's important to mention that interest rates in Brazil, short-term rates at least, were at 2% only, with an inflation that, inflation expectations that are now at 4. So the short-term rates were very negative, right? So what we are seeing the central bank doing now is starting a process to normalize rates. So it already increased rates by 75 basis points in the last meeting, and is expected to increase by at least another 75 in the next meeting. And rates and the way rates should move throughout the year. Most analysts today are modeling for interest rates to end the year somewhere between 5.5 and 6%. I think I think it's a necessary move, right? First of all, because of inflation, naturally, but also because rates were artificially too low, and this has been having a negative impact on the fact that the rates were too low and they are too low. Still, has end up it ends up having a negative impact on the currency, right? So the real has devalued a lot, and this weaker currency ends up pressuring inflation more. So I think moving rates towards a more normalized level is an important move. I think the market in a way has priced it in already, I don't see a big market concern on the fact that rates are moving up. I think the market concerned even if after moving rates up, inflation is not controlled, right? Which doesn't seem to be the case today. I think most analysts think that inflation will even if not this year, but between this year and next year, will move back towards within the inflation target range, right? So that's what is happening with interest rates. For equities and equity investments, I think that that what really matters are long-term rates, right? And long-term rates, they are moving not because of the central bank, not only because of the central bank decisions on short-term rates, but mainly because of concerns over the fiscal situation.
You don't think that's a threat for Brazil equities, but how about valuations? If you look right now, the interest rate compared to PE or EV/EBITDA, that could be a threat for the equity multiples.
Yeah. So I wouldn't say that the fact that short-term rates are moving up is a threat to equities. Naturally, as rates move up, fixed income investments, they become more competitive, right? It's no question. Today, an investor looking at Brazil, a local investor that can buy stocks, uh, they will naturally compare it to the 2% per year return they will get in short-term interest rates, right? So as these rates move up, investments in fixed income assets become more competitive and might attract more money. But again, I don't think this is even though fixed income instruments become more competitive, I don't think this is enough to change what we are seeing, which is more investors diversifying their investments and moving some money into equity. I think this trend will continue, even if not at the same pace that we've seen in recent years, right? Valuations, looking at valuations, well, the Bovespa, it sold off, right? I mean, it didn't do well. Now this month is recovering a little bit. It's a little bit better, but it sold off this year. And by the way, companies' earnings are strong. I mean, we've been listed companies' earnings have been better than what we expected. So we are revising earnings up. We have been revising earnings up for Brazilian companies. And at the same time, the Bovespa didn't do well. So what happened to PEs is that PEs move it back to average, right? To historical average, which we haven't seen for some time. And honestly, it shouldn't really, because interest rates, even though they are moving up now a little bit, they are still much lower than what they used to be, much lower than historical interest rates. So I think it would be okay to see the Bovespa trading at a PE that is maybe one standard deviation above average. And I can even give you another way to look at that, and we have been including that in our reports, which is you look at the PEs or you look at the premium to hold equities, which is the inverse of the PE minus we use the 10-year rate, so long-term rate. And what we are seeing today is that even though long-term rates have moved up, we are seeing the Bovespa trading this premium to hold equities at one standard deviation above average, above historical average. So, it seems that that the PEs have adjusted to the increased risk. Naturally, the risk is really bigger now, so investors are being faced with more uncertainty than a few months ago. But the premium is there, right? I mean, the premium is now more attractive than what it used to be in the past.
Okay, so you feel comfortable with valuation, but there's still a massive IPO activity. Then we might think some part of the market sees an opportunity to sell. If we believe that that is a contrarian indicator, okay? Is the Brazil market cheap enough, you think, to jump in and add to a global portfolio?
Yeah. So I think on the IPO activity, yes, we are having a very intense IPO season, right? We had several IPOs in the first window of the year, and we have a bunch more for the second one. What I think will probably happen is with this increased risk perception and more uncertainty, I think some of these IPOs will not happen, right? I mean, even though we have for the second window, we have more than 40 companies that file for IPO in the second window of the year. I think probably a lot less will effectively IPO, right? So we won't be that many companies. But you were right. I mean, I don't think the IPO. I think we will continue to see several IPOs happening, and good companies priced rightly will probably continue to come to the market. This may pressure the equity of the other companies that are already in the market, right? This could happen, especially if flows to equities, flow from fixed income funds to equity funds, if they reduce, or if foreign investors they don't come to Brazil, right? We saw a big inflow of foreign investors to Brazil up until January, and then and up until February, really, up until mid-February, and then some of these funds left the country because of the increased uncertainty, the pandemic's getting worse and all. But if this money, if the whole fiscal situation is dealt with and the pandemic is showing signs of improvement, maybe we're going to see more money flowing back into equities and even international investors back to Brazil. And I think if that is the case, you'll probably be enough to cope with the increased number of companies doing IPOs. You asked me about Brazil being cheap enough. I think it's cheap. I think Brazilian stocks are cheap. I think risks are higher too. I would have Brazil in a global portfolio because it's cheap, and I think we are now moving towards. Hopefully, we are going to go through the pandemics will be less intense, and the health situation will improve in Brazil in the next month. So I think this could help.
Carlos, I know your team has a top 10 list for large cap and also for small and mid cap Brazilian companies, but can you explain if you have some top picks, maybe one or two stocks or industry you like the most right now?
Yeah. Okay. Sure. Yeah, we put out every month a report on our 10 top picks among all companies. Usually, we select larger cap companies for this 10 top pick portfolio, and then we have another one which is only 5 stocks for focus on small cap stocks. One thing that we have been doing for some time now is because of the uncertainties that we are seeing in Brazil, and because we expect the global economy to accelerate in 2021 with several countries in the North Hemisphere in moving ahead with vaccination and global growth accelerating again, we decided to have and for some time now, this is not recent, we have been having exposure, a relatively big exposure to companies that are exposed to the global economy. So we have in the portfolio Vale, which most of it's an iron ore company. We have Suzano, which is a paper and pulp company. We have Gerdau, which is a steel maker, but that makes 40% of its money, of its sales out of the U.S. market. And we have now potentially a new big infrastructure plan coming out of the U.S. So we have around 35% of our portfolio, which is exposed to commodity exporters, right, or commodity players. In the small cap portfolio, we have an oil company, an oil and gas company, exploration production company called 3R. So we have decided to keep exposure to the global economy via these stocks. We also have a chunk of the portfolio that we are allocating to software/technological companies. So we have Totos there, which is a software maker, which we think it's a very, very resilient business model, usually very well protected against rising inflation. And in the case of Totos, with some interesting growth opportunities, both in financial services and in business performance solutions. So we have it in the portfolio. We added this past month, a company called Local Web, which is basically an e-commerce platform focused on small retailers, small online retailers. It's growing super fast. The company, this stock sold off last month, and we decided to add it to the portfolio. We have also exposure to PagSeguro, which is a fintech company, right, growing its banking operation, digital banking operation. So we have a few stocks which are tech stocks, and then we have B3, which is the stock exchange in Brazil that we also like. We have Cosan, which is a conglomerate but exposed to fuel distribution in the country that we think will pick up as the pandemic becomes less relevant. And we have telecom company Oi, which is going through several big changes that we think will be very positive for the company in the future. So I try to summarize. And we have the big Brazilian hospital chain Rede D'Or, which is a very premium asset, very premium company operating in a piece of the market that is growing very fast and in a very dominant position. So this is our 10 stock portfolio.
Perfect, Carlos. Great call. Take care and be safe.
Thank you, Mauricio. My pleasure. Anything you need, I'm here to help, and we can do it again. Thank you.